We've been very patient about reducing the policy rate. We've waited. Other central banks around the world have cut, many of them several times. We've waited, and I think that patience has really paid dividends in the form of our confidence that inflation is moving sustainably under 2%. So I think that is what enables us to take this strong move today. I do not think that anyone should look at this and say, oh, this is the new pace. You have to think about it in terms of the base case. Of course, what happens will happen. So
gold bulls have been very patient as well, Chair Powell, wading through years of humiliating price suppression criminality with next to no prosecutions and mere paltry fines from time to time, never matching damages persistent price-rigging commercial bank desks have inflicted on the bullion-saving public at large. Other overvalued asset classes have gone into historic bubble valuations. Meanwhile, gold bullion has steadily held its value, but it's yet to begin accounting in earnest for the absurd amounts of profligate monetary policy measures, exploding government deficit levels, and unsaved-for promise piles in the hundreds of trillions coming due this decade and the next. The Fiat Federal Reserve kicked off their rate-cutting cycle this week with a 50 basis point cut, signaling to prudent market onlookers that things underneath the surface are likely worse than being collectively lied about generally. Gold still has to nominally double from here, so that in relative terms versus the current U.S. stock market bubble, one-to-one parity again is reached, which on a long enough timeline I'd argue is perhaps fair value. The rollover on this chart is only getting started. And after such a long period of stocks overvalued versus gold, get ready to see an era where gold goes into massive relative premium to U.S. stocks in time. Some Western financial rags are pointing out the obvious. This one in Canada, for instance, where the fiat Canadian dollar price for gold is already closing in on $3,500 an ounce up north. In the USA, the retail price for a 1 gram gold bullion bar is already in the $3,000 an ounce range. So that $100 fiat Fed note only gets you a tiny gram of gold bullion now. Before all is said and done in this bullion bull market, that will prove value stored in the 1 gram over the paper $100 note. Leveraged gold derivative traders on COMEX are currently calling for technical parabolic moves, with gold likely still having further to run in the short and even medium term. Meanwhile, in the world's second largest gold bullion demand market, August 2024 import data for both gold and silver came out this week, and it points to robust demand levels moving into their wedding season in India, likely spurred by the recent cutting of import taxes on bullion imports. Western financial media originally reported India's gold imports last month at 131 metric tons, but Metals Focus apparently updated that figure, publishing today that August 2024 India imported nearly 160 metric tons of gold, or just over 5 million troy ounces. Indians have lived through generations of fiat currency follies, and thus they see beyond local nominal price highs at the moment. In terms of the bigger store of value gold remains over devaluing fiat currency units to come. Looking at 21st century Indian gold import data by month, nearly 160 metric tons imported last month is historically high, regardless of local record nominal price high levels at the moment. Now, gold hitting record price highs in India is, unlike in the West, an actual leading headline on the news.
Gold prices hit an all-time high. The surge comes after the U.S. Federal Reserve cut interest rates. In India, there's cheer on the Lal Street as well. The Sensex and Nifty hit record highs. The stock market benchmarks jumped more than 1% each. The rupee also strengthens further against the U.S. dollar.
Turning to silver import levels last month in India, they apparently imported nearly 1,400 metric tons of silver last month alone. That's nearly 45 million ounces in a global market experiencing wide and persistent new line and refined supply deficits. Another way to put it, 45,000 of these industrial-sized 1,000-ounce bars went into India last month. Apparently, silver prices at local record high levels is not deterring Indians from importing an amount of silver that the U.S. Mint used to sell in one entire year during its early 2010s American Silver Eagle sales heydays. Final interesting note was around 600 metric tons of the Indian silver imports last month, or nearly 20 million ounces, came from London warehouses. On the other side of this short break, we'll delve into the potential for a future silver catch-up and outperformance rally versus typical bullion bull onset leading gold. Where might the spot GSR eventually collapse towards? And a bit on typical misinformation Western financial commentators continue making in terms of proper gold bullion allocations. Hello, this is James Anderson on behalf of SD Bullion. Smash the like button if you enjoy these bullion market updates. And be sure to visit sdbullion.com/sweepstakes to enter our free 500-ounce silver coin giveaway.
The history of gold is vast and deep, and history is important. Part of a group with over 170 years of history in precious metals, Arger Heraeus has a proven track record refining some of the world's highest quality gold products. As one of the world's leading gold refiners, Arger Heraeus is on the forefront of cutting-edge technology. That's why when SD Bullion was looking to make a gold bar of the highest quality, we chose to partner with Arger Heraeus for their rich experience and history. Our goal was to create a bar that visually expresses some of the core values at SD Bullion, our love for our country and our faith. Introducing the brand new Cross and Flag Gold Bars, featuring a beautiful image of the American flag draped around the cross, imprinted upon 4 nines fine gold. These bars are available in 4 different sizes, and each bar arrives in assay with a unique serial number. Serial numbers 1 through 20 for all 4 size options will be available for purchase while supplies last. A separate listing for serial numbers 21 through 100 will also be available, and all other serial numbers will be shipped at random. The SD Bullion Cross and Flag Gold Bars, the first co-branded gold bar in SD Bullion history. And history is important.
So I went down to the water and found my fate, because I don't wanna be stuck in the good old days. That's when you say, I swear you ain't seen nothing yet. Water and found my faith, bowed my head for the blessings that come my way. There'll come a day, I swear you ain't seen nothing yet.
Exclusively at sdbullion.com.
The spot silver and gold markets rallied through the close of this week's trading. The spot silver price finished just over 31 an ounce, while the spot gold price ended the week above 2,600 an ounce for the first time ever. The spot gold silver ratio actually went up 1 to close at 84, with gold strength at the close of the week. Mark me as not shocked to see that the FBI is now reporting that nearly half of ongoing reported financial fraud complaints are in the crypto market, imploding in real time. Not surprising, after having lived through years in this golden age of frauds, that more than 5.6 billion in reported crypto frauds are piling up thus far in 2024. This is still only the start, in my studied opinion. Billionaire gold bull John Paulson was on CNBC this week, and was really the only worthwhile coverage of gold in the Western world to highlight, as gold remains in a stealth bull market, still at least in the United States. Near no one owns any still.
Welcome back to Money Mover. Still here with John Paulson, Paulson & Company president. I was going to ask sort of how your investments might change, or what it would look like if Harris won versus Trump. So you think there's a clear distinction?
Yeah, I would move more to cash if Harris was elected, and I'd stay invested in gold.
You love gold. You've loved gold for a long time, and a big investor in a lot of gold companies. Have you been increasing exposure, decreasing, staying? What's your conviction level?
Staying where we are. We have some investments in gold companies, and those are doing well with the rise in the gold price. We have some derivative positions in gold. And I think the major reason why gold is rising is generally a global lack of, or having less confidence in paper currencies, particularly among central banks. So they're shifting their reserves away from paper currencies into gold, and that's causing demand to rise and causing the price of gold to rise.
And you think that will continue?
I think so, yes.
Yeah, I mean, how much should people be in gold at this point?
Well, I can't really advise what people should do, but I always think, a 10% allocation to gold would be prudent.
Would be a reasonable thing.
Yeah.
Western fiat financialized media are still using the ancient 10% gold allocation trope thesis, born from the last bull market peak era during the early 1980s. Whereas backtested data over this full fiat currency era beginning in 1968 actually points to owning 20 to 25% gold bullion allocations of one's liquid net worth on a risk-to-reward basis, backtested against U.S. bonds and U.S. stocks over the last 56 years of data. The ongoing fact is Westerners, especially here in the U.S., are still generally gold illiterate, and have next to no gold allocations collectively, regardless of the bullish fundamentals we hammer the table with here on a weekly bullion market update basis. In terms of the current spot gold-silver ratio, we're still at historically high nosebleed levels here, 84. Although if you look at the chart, you can see that we're continually coiling at these levels. This is a higher level than we were in terms of the spot gold-silver ratio back during the peak of the 2008 global financial crisis. It's understandable that given the power that gold is already leading this current gold bullion market with, at some point, massive supply deficits in the silver market globally are going to drive the spot GSR back towards levels last seen perhaps during the pipsqueak 2008-2011 bull run, and possibly to even crazier lower levels beyond in time. Well, that's going to be all for this week's SD Bullion Market Update. As always, to you out there, take good care of yourselves and those you love.
If you enjoyed this video, hit the like button and share it with those you love. Subscribe to our channel and hit that alert button so you know when we publish new bullion market updates.